Augsti godātais valsts prezidents.
Your Excellency, Mr. President, Madam Lagarde, Mr. Dombrovskis, ladies and gentlemen. It's a genuine pleasure to see you in Riga in the 100th anniversary conference of the Bank of Latvia. We mark its establishment in November 1922. Today in our panels we'll be able to meet experts and authorities, also international institutions, speakers and experts from the academic spheres. There are 3 panel discussions in our conference with a coffee break and lunch between them. Since this conference is an international one, I'll go on in English.
Ms. Lagarde, Mr. Dombrovskis, ladies and gentlemen, we are truly pleased to welcome you all at the Bank of Latvia Centennial Conference. The Bank of Latvia has been founded 100 years ago in November 1922. The conference features top-level officials and highly esteemed experts representing Latvian and international institutions and academia. The conference will consist of 3 panel discussions, coffee break and lunch. And now it's time to open the conference. Please let me invite His Excellency, Mr. Egils Levits, President of Latvia, for the opening address. Please.
Mr. President of the Bank of Latvia, Madame Lagarde, Mr. Dombrovskis, dear honorable guests and conference delegates, I am delighted to open today's conference and welcome you to discuss the future of our economies in the euro area. It's a great honor for me to speak to such a distinguished audience here today. 2022 is a special year for Latvia. This year we celebrate 100 years of the 3 pillars of Latvia's sovereignty. The Constitution of the Republic of Latvia, Satversme, was adopted on 15th February 1922, whilst the first president of Latvia, Jānis Čakste, was elected in November of the same year. Also, in autumn 1922, Bank of Latvia came into being by a decision of the government, and ever since it has been the guardian of Latvia's monetary stability. Since the restoration of the independence, 1991, Latvia has lived through its fair share of challenges. We truly know what it means to transform our economy. Having been in the center of our financial system for so long, Bank of Latvia has been a stabilizing and guiding force. It is therefore natural that today our central bank is one of the key institutions to drive change and contribute to tackling the future challenges of our society. Climate change and transition away from the fossil-based economy being the biggest of them all. Madame Lagarde, we are glad to welcome you in Riga once again. During your visit 2012 as the Managing Director of the International Monetary Fund, you encouraged Latvia to join the Eurozone. You quoted the great Latvian poet Jānis Rainis, "Those who change will endure." And I am happy to say today that your encouragement seems to have worked, as Latvia is a member of the euro area already for 8 years. Together with our European partners, we are now focusing on common goals and shaping the policies in the increasingly complex modern economies. We recognize the need to invest our trust in European Union's institutions and structures to have the ability to respond the fundamental needs of our citizens. We live in a time with growing geopolitical security threats, including a full-scale invasion of a sovereign country in Europe and increasingly autocratic regimes challenging the rules-based international order, which is base of the peace in the world. As a result of Russia's aggressive war in Ukraine, we are now in the middle of an energy crisis and rising inflation rates across Europe and the world. As we prepare for the winter, there is no easy solutions to the current energy crisis. Only that we must isolate Russia economically and rid ourselves of prolonged dependence on its natural energy resources. Since the beginning of the war, Latvia provides most aid to Ukraine by share of our GDP. Ukraine is fighting also on behalf of all Europe and for our values. Next week, I am going to attend COP27 in Egypt. We will discuss that the shift toward cleaner sources of energy still is not happening fast enough to avoid dangerous levels of global warming. Energy crisis is also an opportunity. The International Energy Agency has said in the World's Energy Outlook report that Russia's invasion of Ukraine will accelerate a peak in the world's consumption of fossil fuels. Let us use this crisis wisely. I am glad that the Bank of Latvia advocates a more comprehensive inclusion of sustainability objectives in monetary politics. However, it is also a role for the commercial banking sector to become a more active participant in shaping Latvia's future economy. Finally, we need to develop Latvia's capital market to have new channels of financing and investments in green transition. Whilst the role of central banks evolves in the complex world of the 21st century, its independence is part of the accepted wisdom of modern economics and should remain as such. European Central Bank's mandate of maintaining price stability in the euro area is laid down in the Treaty of the Functioning of the European Union. In December 2018, I was one of the judges at the Court of Justice of the European Union who took part in the judgment on the question whether the ECB's government bond buying program were within its price stability mandate. We had to interpret from legal point of view the famous three words of your predecessor, Madame Lagarde, of then ECB President Draghi, whatever it takes. These three words saved euro. But the question was whether this statement was within the mandate of ECB. In the judgment, we confirmed the independence of EGP and the wide margin of appreciation of its mandate. This ruling was later controversially contested by the German Federal Constitutional Court, with implications extending well beyond the issues of monetary policy. This controversy, which was later solved, shows that the benefits of central bank independence from political interference are undeniable. Politics on both European and national level should preserve it and respect it. In Latvia, irrespective of economic and political cycles, Bank of Latvia can use its independence and analytical expertise to shape the public debate and overall decision-making culture. The European Central Bank runs a single monetary policy for 19 European countries, soon to be 20, which have their own fiscal policies and own appreciation of fiscal discipline. How will the current level of inflation affect the ECB's fiscal monetary policy mix? In short, we do not know yet. However, more than before, we need European Union governance structures and institutions that provide adequate and effective crisis responses. Many topics of today's conference will be about the future financing and transition towards greener economies. I consider the digital transformation of our societies as one of the most important tasks. The digital space has become a vital part of our lives, especially after global pandemic lockdowns. It has enormous potential to contribute to the sustainable development of our economies. In Latvia, we support innovative and proven digital solutions that promote the efficiency of public administration, public participation in decision-making, and the creation of new economic opportunities. To protect the strategic autonomy of European payments and monetary sovereignty, European Central Bank is working on introducing a digital euro in near future. However, to ensure that citizens can continue to trust our currency, we must make sure that their privacy is prioritized in this process. Security threats in cyberspace are increasing. If the digital euro is introduced, the data collected should never be passed, never be given to the third parties and used for surveillance and tracking of citizens. Therefore, in parallel with technological developments, we should actively define new legal principles of governing of Internet, in order to avoid the risks and damages to citizens' rights and freedoms. In my firm opinion, that only when all the issues of privacy, the danger of possible spying, tracking, and controlling of people are answered in consistency with citizens' rights and the rule of law, we can go on with creation and introduction of digital euro. Ladies and gentlemen, the euro is shared by over 340 million Europeans. However, we share more than a single currency. We share common values, laws, and interests, which must be defended at all times. The European Union's strength is in close cooperation amongst ourselves, with our transatlantic and like-minded partners in the world. We are changing together, and we will endure together. I wish you all successful conference and fruitful discussions. Thank you.
We thank the State President for his address, and now Mr. Mārtiņš Kazāks, Governor of the Bank of Latvia, will provide his opening remarks.
Labdien, dāmas un kungi, prezidentkungs, laipni.
Ladies and gentlemen, you are welcome to the conference of the Bank of Latvia. 100 years is not a joke, but it is just a beginning. We will discuss this all the day long, but now I will switch to English, since conference is an international one, and dāmas un
Executive Vice President Dombrovskis, dear governors, speakers, ladies and gentlemen. First of all, I would like to thank you, President Levits, for inspiring opening speech, tackling so many crucial issues that are to be decided now, tomorrow, and the day after, but not to be delayed. Not to be delayed. I think that's a very important thing to take away from today's conference. What we will be discussing about, it's not for the next generation. It is for us to solve. Ladies and gentlemen, it's great pleasure to see so many of you here in person, and also, of course, great pleasure to know that so many other colleagues of ours are joining the event today online. Our annual conference today is a very special conference because we are celebrating 100-year anniversary of Latvijas Banka. And allow me, therefore, to begin with a brief look back at the past 100 years. Freedom and independence never come for free. Also to Latvia, it didn't come as a gift. After having declared independence on 18th November 1918, Latvians continued to fight for the newly established country for 2 more years. To support the men fighting in the War of Independence, women, led by the Latvian writer Ivan de Kāja, established the Women's Gold Fund in 1919, and after the victory in 1920, this fund formed part of the State Gold Fund, which went on to become part of the reserves of Latvijas Banka, which, as we know, came into being in November 1922. I would like to pay tribute to the brave men who fought for the independence of our country. Their sacrifice will always be remembered and serves as an encouragement to the people of Ukraine, who today, more than a century later, are fighting another war of independence. And I'm sure Ukraine will win, just like we did in 1920. I would also like to show our reverence to the generous donations of the people of that time. Most of them were much, much less well off than any of us here today, which makes their contributions even more admirable. These reserves help to support a trusted national currency, the lats, which served our newly independent state well until its independence was brutally crushed by the Soviet occupation in 1940. During the half-century-long occupation, money played an important role in preserving our national identity and keeping the vision of independent Latvia alive. In particular, the 5 Lat silver coins of 1920s and 30s became a cherished souvenir passed on from generation to generation. And many of the families still had those coins in their possession in 1990 when we regained our independence. And many families still have them now. This is a true symbol of continued independence of the Latvian state. At the beginning of the 90s, Latvia had a brief period of the Latvian ruble as an interim currency, which took the brunt of hyperinflation. In 92, inflation hit sky-high 950%. It's still a vivid memory in the minds of many people here and has made us particularly vigilant about inflation and its very high costs to the economy and society. The Latvian lats returned as our national currency, a stable and trusted national currency, in 1993. The stability of lats this time around was guaranteed by a peg to the IMF's special drawing rights currency basket and later to the peg to the euro. Moreover, the past had taught us that preserving independence in long run and achieving prosperity would only be possible by integrating into the European and transatlantic communities. Latvia's membership in NATO and the EU from 2004 was crucial to secure our independence. Joining the euro area in 2014 was also a decisive next step, both from economic and a political perspective. To paraphrase the then president of the ECB, Mario Draghi, for a small country to maintain sovereignty in today's era of great power rivalry, certain aspects of its sovereignty have to be shared with other like-minded countries. It was a remarkable historic coincidence that when Russia's aggression against Ukraine started in 2014, Latvia had just become a member of the euro area for 2 months at that time. It was still very early days. This allowed us to knit ourselves even more tightly into the fabric of European nations and common European values. The euro is our currency, and we take a European view. Strong Europe means strong member states, also Latvia. And strong Latvia makes strong Europe. Already before our accession to the euro area, financial conditions in Latvia were greatly influenced by its monetary policy. However, we were not part of the euro area, and our access to financial markets was limited or non-existent when we needed most. When the COVID-19 pandemic struck, we were much better equipped. In sharp contrast to the global financial crisis of 2008 and 2009, Latvia could borrow at very favorable rates and provide support to both households and businesses during the pandemic. Once again, this tale of two crises shows us that being more closely integrated into the European fabric has made Latvia stronger. And as I said, stronger Latvia in turn makes Europe stronger. Today, the global economy and euro area face the challenge of high inflation, which is a true test to the inflation targeting framework. From a long period of too low inflation, euro area inflation has climbed fast to over 10% in October, core inflation at 5%. The key driver, of course, is supply side, especially energy and food prices driven by Russia's war in Ukraine. But demand side factors have been becoming more prominent. Pandemic fiscal support is still filtering through. Labor markets are strong and wage pressures show no easing. In fact, in certain cases, quite the opposite. While inflation expectations have been largely anchored at 2%, the risk of them de-anchoring remains non-trivial. The overall uncertainty is high and the recession risk is looming. In my view, recession in euro area is already a baseline scenario, but so far it's likely to be relatively shallow and brief. And hence, it will be insufficient to break the backbone of inflation persistence. What does it mean for monetary policy? Monetary policy, in my view, must remain on a solid path of tightening. 3 consecutive policy rate increases so far have been a strong response. Their effect is only gradually feeding through onto the economy, but it is clear that the interest rates will need to rise much higher to bring inflation down to the target of 2% over medium term. And in my view, there's no need to pause at the turn of the year. The rate increases must continue into the next year, until inflation, especially core inflation, shows a visible slowdown. Of course, 75 basis point hike is not a permanent benchmark. It's not a step forever. Uncertainty is high, and decisions must remain to be taken meeting by meeting. At some point, rate hikes will need to become smaller, but they will have to be complemented with other policy tools so that all monetary policy instruments are fully aligned and streamlined to reach the inflation target. The first such step was taken last week with respect to the TLTRO3 program. The same will need to be done with APP soon. Of course, cautious at first. To avoid unwarranted and disorderly market dynamics, we have transmission protection instrument. But it's not the only instrument at our disposal. We also have PEP investment flexibility and OMT as part of our toolset. While central banks have on occasion been left as the only game in town, we like to see ourselves as team players. A good policy response requires a healthy policy mix with monetary, fiscal, structural, and macroprudential policies, each contributing their fair share. I would like to evoke an analogy with music here. While of course it is surely possible to listen just to the drums for a while, a complete rock band with a guitar, bass, and the lead singer, of course, can provide much richer sound. And we need a complete band rather than only monetary policy to solve the current challenges. Of course, the responsibilities of Latvijas Banka extend far beyond monetary policy. For instance, we form the backbone of the Latvian payment system. We have been active drivers of innovation. Latvia was the first euro area country to introduce instant payments back in 2017. Following a decision by the Parliament of Latvia in the fall of 2021, we will have reintegrated financial regulation and supervision back into Latvijas Banka as of the beginning of the next year, which will allow us to streamline decision-making and enabling operating synergies. Ladies and gentlemen, the title of today's conference is Sustainability and Money, Shaping the Economy of the Future. The choice of the themes today is, of course, not accidental. We know full well that accumulation of unsustainable financial debt usually leads to a recession, followed by a painful period of deleveraging. Having learned the lesson, we in Latvia are now proudly emphasizing our relatively low levels of financial indebtedness in both the private and public sector. However, globally, and Latvia is no exception here, we all have been borrowing from the planet too much for too long and continue to accumulate debt towards it. Whether the imbalances that have been accumulated so far can be unwound without a massive storm remains an open question. But what is clear is that a complicated and long period of climate deleveraging is upon us. Navigating the climate and energy transition is our generation's #1 challenge. Yes, you heard me right. The #1 challenge of our generation, not the task of the next generation. Delaying this would be devastating and increasingly costly. We will discuss how we can face this challenge together and what role monetary policy and financial sector regulation can and should play in that. The other topic for today is money. While the economic history and the world holds episodes of financial innovations gone wrong, developed capital markets and efficient and secure payment system remain fundamental enablers of economic growth and prosperity. At the center of those is money that efficiently and safely fulfills its 3 key functions: a unit of account, a means of exchange, and a store of value. Technological changes today pose new challenges to the hybrid money system in which both central bank money and private sector money play an important role. We will discuss how money itself could and should change to reflect technological progress and foster economic development, and what's the role of society's ability and willingness to use those new technologies, and what central banks should do to facilitate and support those changes. Finally, let me invite you to a brief thought experiment. Let us imagine that the year is 2122, so 100 years into the future, and that Latvijas Banka is celebrating 200 years anniversary. Which of the trends or events that we view as important today will still be important enough to be reflected on then? I think it's safe to say that the current spike in inflation, nor the recent COVID-19 pandemic will make into the governor's remarks 100 years from now. I'm confident that in a couple of years, we will have resolved the current inflation episode, just as we have largely overcome the pandemic and its economic effects today. However, it does not mean that decisions taken to tackle these issues are not important today. The opposite is true. The faster we resolve such temporary challenges, the more time and effort we will be able to devote to addressing strategic long-term trends. The introductory panel today will discuss what we need to do now to both tackle today's issues and proactively deal with key long-term trends. I do think that the climate transition and technological changes in combination with the dawn of a new era of great power rivalry, as well as the fundamental change in Europe's security landscape following Russia's unprovoked aggression against Ukraine, will come to shape Europe and Latvia for decades to come. Latvia's membership in NATO, the European Union, and the Euro area gives me hope that a repeat of 1940 is impossible. However, we know that hope is not a strategy. In order for Latvijas Banka to celebrate its 200-year anniversary in an independent and prosperous Latvia, we must resolve the challenges that we are facing today boldly and decisively. We owe it ourselves, to our children, and generations to come. Therefore, today I look forward to gain valuable insights from all our distinguished speakers. May we have thought-provoking panel discussions and fruitful exchanges. Ladies and gentlemen, to the next 100 years. Thank you. And let me now welcome to the stage two very special guests, the President of the ECB, Christine Lagarde, and the Executive Vice President of the European Union, Valdis Dombrovskis, European Commission Valdis Dombrovskis.